Good morning from Los Angeles. Apologies for the delay. Little technical problems with StreamYard. We are live. Bloodletting continues, specifically with the crypto crowd. I am adding to some positions and trimming a lot. At some point, one must take a loss and admit being wrong. Now, I'm a trader. This is my trading account. Investing is something different. Although falling or catching a falling knife is not my idea, or DCAing into losing positions is not my idea. But yeah, I mean, I don't think anybody expected what's going on, obviously. But then I mentioned this multiple times. Markets are here to make all of us wrong, and they try their best. And we try our best not to be wrong. And so good morning. Welcome to Trading with Sergio. Monday edition is done. Not much has changed. We had a little bit of a rally between Monday and yesterday, obviously. We had a little bit of a bounce back rally, but we're right back to the sell-off in pretty much everything except obviously, NVIDIA earnings are coming out today, holding the market up. It's going to be important. I took small profits on Oracle. I will not let, going forward, green go to red. It just can't. And hit the singles and be patient and wait for your spots. Yeah, drawdowns are tough, but then it's part of the game. And you need to get used to it, and depending how you treat the drawdown. I mean, if you have a 50% drawdown, because a lot of stocks are down 40-50%. If you have a 50% drawdown, you need to understand that you need 100% up to get back to where you were, and that's a tough game to play. And but so anyway, welcome to Trading with Sergio, Wednesday edition, and we'll see what's going to happen today with NVIDIA earnings. I mean, it's really down to one single earnings report. If NVIDIA pukes, I think pretty much everything is going to puke, although under the surface that we had a bear market, literally a bear market going on with the advanced decline line and things like that. A lot of the high flyers have already corrected 30, 40, 50% from their all-time highs, and market's only 3% from its all-time high. So I've been saying this for a while. What's going to happen if the market corrects 10%, 15%? And if NVIDIA pukes, the Mag 7 will puke. I mean, the market's indexes are holding up at the moment. But then, we don't own the index. We own the stock, unless, obviously, you're DCAing into an index, which is different. But, yeah, that's where we are. I'll put the link up if anybody wants to join. And we can lick our wounds together. I mean, it's been brutal, folks. This is without the indexes pulling up. So, excuse me. So here are the links. All I'm asking is that if you're a quiet place with a good internet reception, and we'll go on from there. If you want to join, please click and come on in. Let me adjust one thing. No, that's adjusted. Okay, cool. I got the red hat today. You know what the red hat means? Red hat means drawdown. Green hat means up. Black hat means sideways. I don't know, honestly. It's just it's my way of kind of, without talking about it, telling what's going on. So what else? Let's go through the quick schedule. Monday, Wednesday, Trading with Sergio. Friday, Power Hour. I will continue doing these lives, and then we'll go through my positions, which I'm trimming aggressively, actually. Taking some losses, taking some small gains, but gotta trim. Gotta accept being wrong. We have to. Market's smarter than me. Market knows more than me. Market doesn't give a rat's ass who you are, how much money you have. It's all about managing. So, I've been through these before. I'm sure, I don't know how many of you have been through this before, a grinding bear market, but in some of the stocks, it's been a grinding bear market. So going forward, what I'll do is I'll apply the same strategies, except that you got to be careful what you're picking. Picking bottoms is tough. That goes with buying, buy low, sell high. I don't know. It's pretty difficult to do, really. I rather buy high, sell higher. So going forward, if we're in this type of a market, I'd rather stick to the 52-week high list. I highly recommend all of you who are on Robinhood or on other platforms. It's very easy to set up a scanner with 52-week high lists. I'll go through my Robinhood list and then my Think or Swim list. There are stocks every day. Even in the worst bear market, there are stocks going up. One thing I agree with Jim Cramer. Hello, Jim. I know you blocked me, but it's okay. We're still friends. One thing he says is true. There is a bull market somewhere, always, and you got to find it. How do you find it? You just set up a scanner with a 52-week high list. There are plenty of stocks. In fact, today, let me just take a look. How many stocks are making 52-week highs, even when everything else is getting dumped? So let's go to the scanner. Let's see. Let's see where we are. 52-week high list. Let's see how many stocks are in there. 52-week high list, 24 stocks. There you go. There's a whole bunch of stocks in there. 24 of them today. TJ Maxx, Savara, Relmeta Therapeutics. Some of the names I don't even know, obviously, but then you don't have to. Medtronic, Liquidia, Eli Lilly. I've been seeing a lot of pharmaceuticals on this list. So obviously money's rotating. Johnson & Johnson is in there. Google making a new high today. A lot of Cardinal Health. Some mining stocks. Albemarle. There's another one that's been going up, actually. That's up 50-60%. But yeah, there are plenty of stocks. If you're going to trade the ones that are making 52-week highs. Don't get stuck with something that's resembles the falling knife. And falling knife, I mean, look, you can try to catch it, but most of the time you're going to get hurt. How many times, you can do this 10 times, and how many times can you catch a falling knife with its handle, by its handle? It's really difficult to do. So good morning to everyone. Newer, good morning, Newer. You've been coming around. Okay, let's answer some questions. So what is the worst case scenario if NVIDIA is bad? No, I don't know about 30%. 30% drop is a disaster. But NVIDIA better come clean and come strong. Expectations are pretty high, about 55% revenue year-over-year increase. But more importantly, it's not it's what they say going forward. The guidance is going to be important. Hopefully they don't pull guidance. Look, there is definitely a shakeup going on in the AI world. I've done a couple of videos about it. Is this all a repeat of 2020.com bubble, which I was on the desk trading? I don't think so. The companies then had nothing, honestly. You could have started Roy.com and you would have gone public and you would have gone up 1,000%. It's not the same. Look at the companies we're talking about. We're talking about Google's and NVIDIA's with solid earnings and great free cash flow. But then, the spending has to make sense at some point, right? These companies are not stupid spending this money. They have to have a ROI out of all the spending, or return on capital. The CapEx spending is crazy amounts of money being thrown at AI. But at some point, these companies have to start making money on this endeavor. So we'll see. We shall see. 30%? No, I doubt it. But if the crack comes, indexes will sell off. I don't know if the underlyings will sell off harder, but obviously they will. But if your stock is already down 40-50%, What's going to happen if the indexes sell off 10-15%? You know, they're going to probably go down another 20-30%. So Noor says, I'm a beginner. About a 1 year in the stock market and wiped out all my gains for this year in the last month. Yep, that's definitely the story, especially if you go on X. A lot of people are posting, I'm quitting doing this. This is the tough part of the market, right? You work hard for 11 months. In 1 month, you get wiped out. Well, you learn. You learn how to manage risk. I've said this before. I said it in my members group, which is dwindling actually now, because I think they're all having a horrible time. They're not even here today, which is odd. But I do have a members group, by the way, for whatever it's worth. If you want to join, click join. Send me an email, sergio@sergioavadian.com. I'll send you the Telegram chat group link where I post all my trades. I run this with full transparency. I have nothing to prove. I'm not in a pissing race with anyone. You know, I post my positions every Monday, Wednesday, and Friday on the community page on the YouTube channel. Wins, gains, losses, because on X, if you're following something, in fact, I have a video coming about these influencers on X, or so-called gurus that say, oh, sell puts, sell this, sell that. Be really careful, folks. Selling puts, selling calls is not what they say it is. You must really understand. So I'm a beginner 1 year. Yeah, exactly. It's a very common story. Been doing options for just 6 weeks or so. Yeah, I mean, you know, buying puts is not going to be that easy either, because VIX is going up. Okay. Yeah, it's going to be difficult to make money on the puts as well, because, you know, do you understand Greeks? Do you understand implied volatility? Do you understand all of that stuff? Do you understand the second order of Greeks? Do you understand Vanna? Do you understand Charm? If you don't understand any of that, I wouldn't suggest doing anything as far as options, especially directionals, are concerned. Because if you had directional puts on indexes, you wouldn't be making money, and then your underlying stocks are bleeding. So you have to be really, really careful. If you're taking directional bets with options, you have to be right in 2 Ds. The 2 Ds are direction and duration, right? I mean, look, you know, most people say buying directional options is gambling. To a point, it is, because 90+% of options expire worthless. And that's why there's these gurus on X saying, oh, sell options, it's wonderful. Yeah, but you can sell an option all you want. If your stock is tanking by 50%, the put you sold goes in the money, deep in the money by $20-$30, then what are you going to do, right? And the underlying is you're losing money. You have unrealized losses, basically, but they don't show you any of that stuff. They don't tell you that story. There is a story to be told, which is there is the other side of the coin, and the other side of the coin is pretty ugly. Here's a bear. G-Money says VIX at 50 soon. Wow, if VIX goes to 50, we're in trouble. Let's go. So hopefully, I don't know if you know you're short the market, or if you're not short the market, you're not making any money, to be perfectly honest, in anything really. You know, you can listen to some of these gurus on X, or Tom Lee or Michael Saylor. Look where their stocks are. Look where BMNR is. I had a really popular video I put out on Monday. Go check it out. You know, I put their pictures up and said, now what, right? BMNR making lower lows now, under 30. Ethereum under 3,000, Bitcoin under 90,000. Where is that going to stop? I don't know. Okay, well, I mean, be careful with those, man. You know, there's many ways to skin a cat, right? If you're long puts, great. But if you had a drawdown of your magnitude, right? You know, especially if you're into options in 6 weeks. Oh, okay, cool. If you're into options only for 6 weeks, please go study the Greeks, understand the Greeks, the relationship between implied volatility and the Greeks, what delta does to gamma, what gamma does, the gamma exposure. Definitely second order of Greeks. But if you don't understand it, you must really, really be careful with directionals. There you go. There's one way. I actually like that comment. I'm not short. I'm liquid. Yeah, there you go. Cash is a position when you're trading, right? The best thing you can do is sit on your hand. Look, you have 2 choices: participate or sit. Sitting will not cost you money. participating will cost you money, especially if you're wrong, right? So, and buying puts has not worked on the indexes. If you bought puts on individual issues, yes, that would have worked, even with high implied volatility, because market makers are putting ridiculous amount of IV on these things, and but you still make money because stocks are really getting hammered. Oh, there's one. Okay, present. Well, yeah, hopefully you're doing okay as well. So he says I'm liquid. Okay, so you're just waiting with your powder dry. I have my powder dry. I'm nibbling here and there, but I'm still getting hurt. And I'm saying nibbling. I'm not even saying, YOLOing. I don't YOLO anyway, but it's difficult. Markets are difficult. So Nvidia earnings, we'll see. Is it going to save the market again one last time? I'm not sure. We also have important. Let me go back to that. I repeated this on Monday, but unless I erased it. No, there we go. All right, so today is Wednesday. Fed meeting minutes are coming out today. That's important, right? What they decided last time when they cut the rates, what they talked about. There is a little bit of a hawkish tone coming out of the Fed over the last few days. That's also not helping the market. That the odds of a December rate cut, although the rate cuts mean nothing really, if you do look at the, Fed's cutting the rates, but the bond market's pushing the rates up. How do you figure that out? Go to look at a chart called TLT, right? TLT is the inverse indicator of a 20-year note, 20-year bond. The rates literally have been going up since the day the Fed cut the rate. So Fed cannot control the long end of the curve. They can control the short end of the curve. And the rates have been going up. There's no ifs and buts about it. Mortgages are not coming down. Housing is still in the toilet, but we'll see. The most important one, obviously, is today NVIDIA earnings, and tomorrow September's jobs report. Now, these numbers, this is September, right? We're in almost November, middle of November. So because the government was shut down for 40 days, BLS, Bureau of Labor Statistics, is going to bring out numbers that are from the past. Now, that may be positive, but then what happened the past month and a half, right? So we're seeing all these major corporate layoffs, right? UPS is doing it, Amazon is doing it, Target's doing it, and all these companies are doing layoffs already. But the Fed is also talking hawkish. So, that's why the market's kind of in a shaky ground. Philly Fed manufacturing data on Thursday, October existing home sales on Thursday. So a lot of numbers coming out. And on Friday, November services PMI, inflation expectation data, a lot of Fed speakers. So there's a lot going on this week. But NVIDIA obviously is going to rule. We'll see. We'll see how the earnings are going to go. It's after the close today. But the jobs report tomorrow is also going to be important, although it's going back a little bit. Old news, right? How about puts on PLTR 165 next week? Yeah, see, that's the problem you have, right? First of all, if you go on these, that's gambling. I mean, I'm not going to sugarcoat it. You may like it, you may not like my opinion, but that's gambling for next week. Remember the things that I told you about 2Ds. Forget about all the Greeks, right? Duration and direction. Stock is nowhere near 165, right? So you're expecting a massive move down in order for you to have success with that trade. It's going to be difficult, right? Because you must understand there is something, especially if you're buying those weekly short options, short duration options, you must be right on direction and duration immediately. If you're not right, there is something called theta. Theta is one of the five Greeks, on first order Greeks. That's time decay. That option is going to start melting. So if you're on Robinhood, actually, Robinhood has a pretty good UI about that. It tells you what data is. It tells you how much money you're losing every day if the stock goes sideways or doesn't go up. Forget going against you. Even if it goes sideways or down in your direction, you may still lose money with those puts. So you have to be really careful with buying directionals. You have to do directionals when, like, let's say quantum computing stocks, right? When they were melting up. Yeah, then you can go short-term directionals because there is so much gamma squeeze happening there. Then, yeah, you can take advantage of that. But if you're, and you could have done the opposite, but the puts on the, quantum computing stocks, because they took the full tour, right? It went from 5 to 50 down to 20. So you have to be able to understand all the dynamics of especially short-term options. So most people will have more success selling short-term options than long-term. So I still own 200 shares of PLTR. Yeah, well, if you did it that way, that's a different story. So you're not net short, you're trying to hedge. Okay, that's fine. That's a different story. But then what's going to happen is that you're basically buying insurance on a house that could burn down. That's it. I'm not saying it's going to happen or it's not going to happen, but the mood around AI has turned quite a bit over the last month, especially with what Michael Berry is doing. Again, I have a video coming out today about influencers, about, I'm not calling Michael Berry an influencer, but, he had one success. He hit a home run. He was actually 2 years late into that. And he bled for 2 years before he had success and made billions. Finding a top, finding a bottom is really, really, really one of the most difficult things to do. And whoever says it, I buy the low and sell the high, run the other direction. They're a bunch of bullshit artists. Not too many people can do that. Not too many people are able to do that because it doesn't exist. It's just not possible. Because markets go a lot higher than you think they're going to go if you're short, and markets go a lot lower than you think they're going to go if you're long. So, because Michael Berry bought some way out of the money puts going out to 2027 and calling, AI a bubble. Okay, if you follow Michael Berry, if you went and bought the same puts that he did, you may be making a little bit of money. But then, these folks do things and then they tell you what they did weeks later. So, look, we're all on our own in this race, right? We have our own cars. We set up our cars in a way that we're in the race. Yeah, we're going to go hit a few walls. We may get into a couple of crashes, but then it's important that you don't wreck the car completely. We can have a little body damage here and there, but we make sure the engine is okay still, the brakes are okay. We treat the tires with care. That's the analogy that trading is about. You just can't just go saying, oh, look, Tom Lee is saying BMNR, he's buying Ethereum. Okay, he's buying all this Ethereum on the planet, and then Ethereum is down 40% from the high, 4,700 to 2,900. Okay, now what? Right? And strategy just bought another 8,500 Bitcoin at 102, down to less than 90. Now what? Right? Strategy stock down 180 to 185. Now what are you going to do? Right? So, I've done a lot of content on the channel. You guys can go check it out, honestly. What's the best platform for a simulated account? There's a lot of good ones. I'm on Thinkorswim, and I have a small trading account on Robinhood just to get used to the UI. To learn options, forex, or future. Yeah, futures are easy. I mean, not much you can mess up with. You go short, you go long. Futures are fine. Options are a little bit more difficult. Simulator accounts, I'm pretty sure Thinkorswim offers it, Tasty offers it, right? And Robinhood, I'm not sure if they have a simulator account, but I'm pretty sure Tasty and Thinkorswim. If I were to open an account somewhere today, I wouldn't do it in Robinhood because Robinhood, there's no free meal. I do like the Robinhood UI. I think it's great. And I think I like what they stand for, democratizing trading, but then a lot of people don't understand the nuances of trading, especially when it comes to options, the Greeks especially, and they don't understand it. Just jump in and they YOLO into things. It works once, and then they think that's how the game goes. They YOLO again, and they get nailed to the wall. So the best two, I would say, for my money, because then you can just progress into actual trading, meaning getting your car in the race with real money. Because the other thing is, look, I'm not a huge fan of paper trading. Because paper trading is like playing a video game to me. Like, what happens when you get killed in a video game, right? You push restart and then you start again, no harm, no foul. Paper trading to me is the same thing, right? Your emotions are not involved because once you get the car in the race, meaning real money, then emotions get involved. Then, mental attitude gets involved. And all this stuff just, that you don't practice while you're paper trading or simulator trading comes into play. very few people that I've taught are able to or were able to carry their paper trading success to real world trading. The reason for that is during paper trading, okay, you blow an account, no harm, no foul. Your bank account didn't diminish, right? So, to me, paper trading is fine to a certain point, and because of the reset button. Live trading with your real money, get the car in the race, is not the same. So, but those are the two I would say. Tasty and Thinkorswim, I think, would be the places to go. I'm sure there is Webull, there is Moomoo, and there's all these other ones that you can try. I'm pretty sure they have some sort of simulator. But again and again, paper trading is not, is not. I mean, it's fine, right? Just to understand maybe the relationships between the Greeks and things like that. But paper trading is, is not my favorite thing to do. But then, yeah, I don't mind. So what's going on today with crypto? Let's see. Bitcoin 88.9 under. Wow. Ethereum 28.86. Absolutely tanking. I mean, yeah. Solana down to 130. They're all down 8, 9, 10%. And I am short some puts on 2x ETF of whatever. I'm going to get assigned for sure, but I don't mind. You're welcome. My options trading account is just level 2 cash account. Okay. Any ideas how I can use what I have in the market if the market goes down fast? You can buy puts, you can buy calls. You're doing that, right? I mean, in a cash account. In order to be, so there's 3 levels of option trading. Level 3 is you can do pretty much everything, right? Selling puts, selling calls, naked as well. You can sell, if you have a cash account, you can sell cash secured puts. You can do that. You can definitely go long puts. You can go long calls. Yeah, level 2 is pretty much, so level 1 is basic. Level 2 is you do a little bit more things. Level 3, they allow you to do everything. But then in order to get a level 2, you have to get approved for level 2, and not level 2, level 3. And, I mean, some of these brokerages will give you level 3. I don't think they care, honestly. You just have to do the paperwork correctly. Hint, hint. That's all I'm trying to say. Short the futures, right? If your market's going down fast and you want to hedge yourself, short the futures is the best thing to do. I wouldn't mess with options because implied volatility is going to go up with VIX. If VIX is going to go to 50, like the other gentleman said, IV is going to go through the roof, and the puts you buy are not going to give you that much protection. So short the futures. That's what I would do. That's pretty easy. One click and you're short. So let's go to the positions. I posted the link. Let me post it again if anybody wants to come on and join the stream. Here it is. There it is. If you want to join the stream, grab the link, be in a quiet place, and good internet reception. And you don't need special software. It's a web-based application. So let's go to the positions. Let's look at the bloodletting that's going on in my world. Yeah, we're definitely getting hammered. Jesus. We're definitely going to get assigned BMNR. We're definitely going to get assigned some other stuff. Luckily, I cleaned up a lot of the positions, thankfully. Yeah, I may buy some Solana 2x ETF, but yeah, I closed some put credit spreads with losses on SBET. Yeah, I don't have much. I just have, I'm building a position on BMNU, which is the 2x ETF of BMNR. So let's go through it. Positions down to 4 or 5 positions, really, actually 4. I am long 400 leaps on ASST, which actually, I mean, miracle of miracles is holding this shit together. I'm long 400 of the January 2027 calls, 2.5 calls, and long 300 of the January 5 calls, 2027s. BMNU is a new position, which is the 2x ETF of BMNR. I'm long 1,500 shares at 913. Stock is 6,870, folks. And I'm short the 7 puts, short the 8 puts, and short the 10 puts. So this was a covered strangle when I first started it. Now I'm just doing naked strangles. If I do get a sign, I'll take the shares. It looks like I'm going to pretty much take all the shares. So at the end of this, let's see, 1,500 plus another 1,000, 2,500, 3. At the end, I'll own 3,500 shares by Friday if BMNU is the same place. So the strategy is I'm selling naked strangles. Like today, I sold naked strangle, going to the 7 puts, expiring on Friday on BMNU. So I took in 65 cents. That puts the stock to me at 635. Stock is 670. So I'll take the shares. Yesterday, I put on another naked strangle with the 8 puts because that's where the stock was at 870. It's getting hammered today. It's down pretty big, and I put those at 85 cents. So that means my cost base is going to be 8 minus 85 cents is 715. And when I put the covered strangle on by buying the shares originally, I had sold 10 puts and 10 calls at $2.30. So my cost is going to be 770. So overall, my cost basis, once I get assigned all these shares, is going to, if I get assigned by Friday, all these shares, it's going to be pretty reasonable to turn around and sell some calls and then, turn into a decent position. So the other thing I'm doing is obviously not only I am short the puts, but I'm also short the calls. So the calls are going to expire worthless because in a strangle, naked strangle especially, both sides cannot go against you. One side is in the money side, the other side is the free money side. So the 10 calls obviously are going to expire worthless, but I'm short the 10 calls as well, so they're going to expire worthless. I took in 54 cents. So overall, I'll manage the position as well as I can, obviously. But when I do get assigned all these shares, my cost basis probably should be about 8 levels, and then that's on 3,500 shares. That's $5,000. Stock is 672. But then you can always turn around and sell $8 calls, $10 calls. You can start lowering your cost basis, so I'm not too concerned. The next position is I'm long 5,000 shares of Blaze AI, BZAI. 243 is my cost. 228 is where the stock is. Luckily, it's holding. I'm just long 1,000 shares now. FTHM, I've been trimming, taking losses. SBET, I took all the losses today and closed the put credit spreads, but I'm going to put on some more put credit spreads actually. I don't mind getting assigned SBET at under 10. In fact, let me take a look. Yeah, look at BMNR. I mean, it's absolute bloodletting, folks. And this is ETHA, by the way, the Ethereum iShares ETF. I mean, it's just bloodletting without a question. And look at that chart. I mean, if that's not a downtrend, I don't know what it is. And here's BMNR, where all the folks are saying, yo, look, it's here, it's there, let me draw some chopsticks. It doesn't work, man. It does not work. So on SBET though, let's see if I can do a short-term trade and take in some money. I was long Oracle call debit spreads. I took the profit, got out of those. Those are the positions that I have. Let's see, SBET, November 21. Friday expiration. Where are we? Stock is 992. So let's go with the 10 puts, 9 calls. I mean, 10 puts, 9 puts. So that'll be a put credit spread. Put credit spread is you sell it closer to the money or at the money put, and you buy it out of the money put for protection. Luckily on SBET, my put credit spreads were 15 and 12.5, and I had put them on 160. Even with the stock going from 17 to 10 or under 10, I only could lose 2.5 max, right? Because that's why you put credit spreads, defined risk downside trade, and it's enough for me to bleed badly even with those. because, well, they didn't go to max loss, but they went pretty close. I put them on a 160 and I closed them at 220 today. So 60-cent loss on 80 options. That's $5 grand, right? Okay. So you need to know when you're wrong and you need to take it, because if I don't do anything, they're going out to January. But if I don't do anything, I'm going to get assigned a whole bunch of shares of SBET, 8,000 shares of SBET at 15 minus the $1.60 at 13.40, and stock is under 10. And that's a $25,000 loss. Why would I do that, right? So that's why I do defined risk downside trades, and hope for the best. And then you turn around with that money, buy some calls. So okay, so we're going to sell the 10 puts and we're going to buy the 9 puts on SBET going out to Friday. It's 32-cent credit. That's pretty decent, actually. Let me put some of those on. Let's see if we can do them at some. This is expiring on Friday. No, market maker chose not to give it to me. Fuck you, market maker. Okay, well, we'll see. We're at 996. Let's do it. Let's do 10 more. Let's do 10 more at 30 cents. So that means I'll own, if it's there. I can roll them, obviously. Let's try to do them at 30 cents. Why not? I should be able to leg into this, man. 38 and 8, 30. Yeah, they'll probably do it at 30 cents. 32 is fine. Let's put some more at 35. And let's put some more at 38. I'll do 30 of these. Try to catch $1 grand. This is cash grab. If you're going to do this, understand why you're getting into 32, 35, 38. Okay, that's fine. Yeah, so that's where we are. I'm looking to get assigned BMNU. Options are very, very juicy premium on this. That's the 2x ETF of BMNR, folks. And they're very juicy premiums. So, yeah, I don't mind. I don't mind getting assigned. I'll figure out my cost. That's, so it'll be 9. So I own the shares. I own 1,500 shares at 913. Stock is 685. So 2.5 point loss there. But the calls are protecting me a little bit. Not much. That's the problem. But also YOLO, these ex-gurus saying, oh, look, my cover calls are printing. Yeah, my cover calls are printing. My underlying is down 2.5 points. What kind of bullshit is that to say to anyone? I mean, here's the perfect example. My cover calls were sold at 54 cents, the $10 calls. When I bought the stock at 913 last week, okay, my cover calls were sold at 10. So at 10, they were sold at 54 cents. Well, they're going to be zero, but the stock is 680. Okay. Okay. So I collected 54 cents. Let's take 54 cents out of 915, let's say. So my cost is 860. Stock is 680. What are these people talking about? What are they smoking? These people are smoking crack. They go, oh, my short calls are printing. Yeah, your short calls are printing because the underlying is dead. And here it is, 2.5 point loss. What world are we in? I mean, a lot of people just kind of go like, try to make everything look like, oh, everything I do makes money. Okay, good luck. Not going to work. You're going to lie to yourself to a certain degree. After that, you got to stop, because your account is bleeding, regardless of what you're doing. If you're wrong, man. Admit that you're wrong. So those are the positions. I'm going to try to put on these SBET 10-9 put credit spreads. Would I want to take 3,000 shares of SBET at 970? Not really, but it's a cash grab. If it's above 10, I'll grab $1,000. If not, I'll roll them or close them. That's all there is to it, honestly. Not much more going on. Oracle, I closed just to not let it go to red. I think that will probably continue bouncing here, probably. I mean, here's a perfect example. 345 high. This is Oracle, folks. 210 low, right? Yeah, I mean, there's a lot of blood happening here. A lot of these quantum computing stocks. Here's Rigetti. There it is. 58 high, 21 low. Let's look at Palantir. Palantir 165. Yeah, it's rolling over without a question. Well, maybe your 165 puts will be okay for protection anyway. They're not going to give you full protection, by the way, but they'll give you some protection. Here's NVIDIA. Yeah, NVIDIA is going to either save the market or just break the market. I mean, I see NVIDIA going to 160, ultimately to the 200 EMA. If earnings are bad, that's 50 points from the high. So, yeah, that's where we are. And, some more nosebleeds like All Close and CLSK. And look at this thing. Look at that thing. It's 1020. Stock was 24. That's down 60%. There's many out there that are in bloodland. And there's a MicroStrategy. I mean, holy crap. 183. People go like, oh, I'm short puts. I'm like, okay, then what are you going to do when you're 30 in the money? Yeah, we just did the first 10 of them at 32 cents. See, I did not rush, right? I waited. You just got to be patient with all these positions. So I did 10-9 put credit spread expiring on Friday at 32 cents, 10 of them. I'll do 10 more at 35 cents. I'll do 10 more at 38 cents. In fact, let's just change those. 3 cents at a crack is too close. Let's go 32, 37, 42. 37. The stock is 987, for fuck's sake. Jesus Christ. And, well, if Ethereum goes down, these are all going to go down. So, period. No ifs, no buts about it. And whoever says whatever they say on X, they're bullshitting. Because BMNR is going down. BMNR is going to 25 if Ethereum goes to 2,500. You guys can cry all about it. That's about it. If you don't think that's going to happen, grab the link and come online. We can have a civil discussion about it. Because a lot of people think BMNR can move separately or independently from Ethereum. It cannot. It will not. It won't. So stop smoking crack or whatever you're doing over there on X, selling some snake oil to some poor people who don't understand what the hell's going on. Oh, Tom Lee said so. Who gives a shit what Tom Lee said? Honestly. I mean, look, I like Tom Lee. I think he's great, but he's a perma bull. Just yesterday on CNBC, he's saying, yeah, he thinks Ethereum is going to whatever, 20,000 or 8,000 by the end of the year. Tom, we have with the holidays, we have 20 trading days left. I'm not sure about that one. And he goes, Bitcoin going to 200,000. I'm like, Tom Lee's Tom Lee. I mean, look, I respect the man, obviously, but then, he's entitled to be wrong. And this time he's wrong, and he's taking a lot of bags with him. But then again, what can you do? It is what it is. So, yeah, we'll just get the account ready to get assigned some BMNU. And then let's look at, even at this level, where are the December calls? So I'm assuming I get assigned all these shares. I think I'll have 3,500 shares with a cost of probably about 8. And these are November. They don't have weeklies. That's the problem with BMNU, but then it is what it is. The 8 calls, I can get $1.50 out of it. Yeah, on any rally, I'll get $2 out of it. So it's pretty fair. You do it for a couple of months, lower your cost basis, even if the stock is lower, and then you'll wiggle yourself out or add to the position by doing a little bit more covered strangles, sell puts, sell calls. You want to add to the position, to be perfectly honest. But at this moment, all I see is bloodletting. All I see is red. That's all I'm seeing. I mean, that's BMNR, folks. And people are drawing lines on BMNR saying, oh, it's going here, breakout, this, that. They're all smoking crack. In fact, let's take a look at it, because, it gets on my nerve when people do shit like that. Here's BMNR. Okay, let's take a look at it. Let's compare it to ETHA, which is the Ethereum ETF. Okay, let's take a look. Well, same time period. Okay, so Ethereum topped on at 4,700 on 10/7, right there. Okay, 10/7 at 4,700. So Ethereum today is down from, okay, this is not obviously, it's the same percentage though. So 36 was the high. Today we're at 22. Let's say, let's be generous, 21 and a half or 22. Okay, so what is that? 36 to 22 is 14 points. It's about 30%, 35%. Okay, let's look at BMNR, same time period. BMNR was 66, 10/7, same time, same day. We're down to 28. How much is that down? Right? 66 to 28 is 38 points. And that's down close to 45%. So BMNR is going down more than Ethereum is. That's because MNAV is getting crushed. And that's what people don't tell you. There's something called MNAV, multiple net asset value, because BMNR is not an actual company. I mean, it's a common stock, but they don't have cash flow. They don't have earnings. They don't have anything. All they have is the net asset value tied up into Ethereum. Okay, cool. Well, MNAV means multiple net asset value or market cap to net asset value. All of these, MSTR is under 1 now, and they used to be at 2.2 again and again and again. You got to pay attention to MNAV. SBET, I got involved at 14 when MNAV was 0.85, and it's 0.82 now, and stock is 40% lower. Why? Because Ethereum is 40% lower, period. So BMNR by itself is not going anywhere. BMNR is going to go down hard if Ethereum goes down hard, and BMNR is going to fly if Ethereum flies. Well, we are down to 2180 on ETHA, which is down from 36. There you go. That's it. That's the exact same chart. That's the ETHA chart. This is the BMNR chart. Identical. So BMNR is not going anywhere but down if Ethereum keeps going lower. Done. End of conversation. So, but then, you know, you make a stand, you check it out. You're wrong, you're wrong. You're right, you're right. You move on. We'll see. We'll see what happens. So I'll put these put credit spreads on, you know, for Friday on SBET. Do I want to get it signed? Really? 3,000 shares at 960? Not really. I'd rather take the BMNU, the 2X ETF, and that's where we are. So let's go to the front, answer some more questions, and go have a cup of coffee. Good question. What do I think is happening? Zcash? Yeah, Zcash is supposedly, let me go here. Zcash is supposedly Bitcoin replacement-ish kind of a thing. I don't think it is. But if you look at on Coinbase, Zcash has been going up, and supposedly that's the threat to Bitcoin. I don't know much about it. I have to study it, honestly. Adrian says, any thoughts on buying low theta? Okay. Low theta. Okay. I mean high delta instead of low theta. Theta is still going to be there, but it's going to be low because you're deep in the money. Leaps on Dash. No. Don't like any of those companies. I think, personally speaking, again, none of this trading, financial, or investment advice, folks, okay? I don't like DoorDash. I'm very familiar with the gig economy, Uber, Lyft, DoorDash. I don't like DoorDash. No. No. That's all I can answer. Tom. A lot of people are looking for him. Well, it's tough. It's tough. I mean, what's going on with this BMNR? And I see people bleeding to death, and I'm like, I'll average down. I'll buy some more diamond hands. I'm like, okay. I'm not doing any of that. I'm getting killed. So I can imagine what these people are going through. Okay. Honestly, I don't know. Domino's and Chipotle seem like a good. Well, okay. So let's talk about that. Let's talk about that. Domino's, Chipotle, Kava. I'm in Kava in my long-term investment account. So, and I don't know. I don't know what's going to happen. I mean, oh, okay. We'll have a visitor. Anyway, let me answer this question. I'll let TJ in. Domino's and Chipotle seem like a good. Yeah, I mean, I bought UPS in my account, long-term account. I have 4 stocks in my long-term account: Kava, Lulu, Lemon, Google, and UPS. So, all right. And so thanks, man. Yeah. I don't think it's going to replace Bitcoin. All right, let's put the man in. The man, the myth, the legend. What's happening?
What's up, guys? How are you?
Good, man. Good.
I was updating some spreadsheets, and I had you on the TV.
Is that your Palantir hat?
Yeah, I got a Palantir hat. Dougie Dollars. Shout out to Dougie Dollars. He gave this to me.
Oh, cool.
So
cool.
It's a pretty cool little hat.
We need to put the rally hats on. TJ.
I don't own any shares of Palantir at the moment. I find that that Palantir was just a stock that the only way that I could comfortably make money with it right now is strangling it.
Yeah.
Because it's just so, I mean, for me, it was so overvalued.
Yeah.
So the naked calls are like printing, and I put puts at 160. Like I picked something, like I actually drew squiggly lines and stuff, and I was like, I don't think this thing's gonna go to 160. And dude, it was like, I think I saw it earlier. It was like I got off my motorcycle. I think it was like at 162. So it's like
it's getting close.
In this market right now, Sergio, nothing's safe, bro. Like if you think BMNR can go to 30, it's gonna go to 20. If you think it's gonna go to 20, it can go to 10.
Yeah, that's why. No, I agree with you. That's why naked strangles in this type of marketplace is going to be really difficult, because then you can get whipsawed.
Big time.
Because you roll the calls down, you roll the puts down, which is what you're supposed to do once you go into money. My rule of thumb. So I don't know what yours is, but my rule of thumb on naked strangles is this. So let's say you're doing Palantir, SoFi, whatever you're doing, so let's say combined premium on the puts and calls I took it, right? Yeah. If one side gets violated by the exact same amount of premium, I will roll. That's what I will do, or close the position, take the hit, and then be done with it.
Right.
So that's been the rule of thumb my mentors taught me. So if you took in $10 on Palantir Strangle, let's say, right? Yeah. 165, 240, whatever it is. I'm just hypothetical.
Yeah, 160, 240. Yeah.
160, 240. Okay, so you took in $10, let's say, both sides when you did it. And again, hypothetical. I'm not saying you did that. Yeah. So when the stock gets to 150, you either close. I personally like closing, just take the hit, and because calls will be less, puts will be whatever, because there will be some theta decay. Or if you're going to roll, you roll, right? So, but the market's so volatile now that, then you go to 160 to 150 and then roll the calls down from 240 to 220, let's say, right?
Yeah.
And then some shit will happen, bounce will happen, and then the puts will be fine, and then you get whipsawed on the call side now. And I'm going like, okay, the naked strangles when VIX is going up and IV is going up is not my game. I get nervous doing that kind of shit. But
yeah, I think the one thing though that does need to be said that isn't said enough, and I'm trying to say it more like on my channel now, is you got to be picking stocks that you're comfortable with at levels that you're comfortable with on the put side, mostly, especially when things are tanking. Yeah. But then also you have to be able to write out the notes. And what do I mean by that? You have to be willing to get to that 21 days to expiration, right? Like, because there's like, to me, I call it the 250s, right? There's the first 50% of the contract statistically is a lot easier to grab than the second 50% of the contract, because then now you're dealing with your gammas, your vammas, your second order Greeks, if you will, right? Like everybody just looks at the delta, right? Everybody looks at the theta. But then there's this gamma that is the accelerator to the delta. And as you get closer to expiration, it can turn winning positions into losing positions very, very quickly for you.
Yep.
And then there's Vama, which is the accelerator to the Vega. It's another like second, third order Greek that people don't talk about. But essentially, when the VIX gets out of hand, it can really get out of hand for you. Like the volatility can really get out of hand, and it sometimes it's just easier to take a loss, man. Sometimes it's easier to take a loss and just fucking regroup. You know what I mean?
Yeah, I told you this a million times. I've known you for about a year now, so taking losses sometimes is the best thing to do, because you're not wasting money on top of everything else, and you're not, also there's emotional energy, there's other energies that you're spending on, because you now really have to closely monitor because you're so close to everything, right? And to me, sometimes taking the losses, regrouping, keeping your equity together, keeping your powder dry, as opposed to hope and pray, because a lot of people are hope and pray. I go, oh, look at this. Well, I mean, like, I get it, I get your point, but to me, it's like, hey, just be real about what you're doing, and I think you're one of the few that is. So
I just think the one thing is that you talked about it, and I just wanted to come on and talk to you guys a little bit, is there's trades and then there's campaigns. Like when y'all see me run the same trade over and over, like a broken record, like SoFi's been a campaign for me since it was IPOE. So it's like I say that it's not always going to be sunny and 75 in the market. Like right now, it's not sunny and 75. It's not beautiful California weather right now. The market feels like the fucking frozen tundra. Like we got dropped off in the Yukon. You know what I mean? Like it's tough situations, but you got to figure out. Okay, I still have my little restaurant open. I guess I always call it my hamburger stand. I still got my hamburger stand open. What is the best that I could do with the current market conditions? Or are these even conditions that I want to go out in? Or is just taking a step back, even if you have to log in some losses, wait 30 days, take your penalty, right, for your tax harvesting, and then formulate a game plan. Sometimes you just have to regroup, like sometimes you have to regroup, depends on where you're at. I want to encourage people to figure out who you are in the market, how you want to play the game so that you can stay in the game for the long haul. Sergio, you've been in the market for what, over 30 years, right?
Yep.
I've been invested in the market since 1997, been full-time 5 years. So I feel like I know a lot more now than I did in year one, but I feel 5 years from now, I'm going to know a lot more than I know today. And that's what life is. But I have to make sure that no matter what I do in the market, I don't get myself in a situation where I get out of the market because you blow up your fucking account by just getting too crazy, but revenge trading, all this stupid shit.
That's the key, right? So market, there's a lot of newcomers here that haven't experienced the other side of the coin, I call it. Because the other side of the coin exists.
We got a little taste in 22, Sergio, a little bit. It wasn't
but that honestly, that's not much, but the other side of the coin, actually the other side of the coin is presenting itself pretty heavily now, because a lot of people are looking at just the indexes. Look, indexes are down only 3% from the all-time high.
Yes.
And there are a lot of underlyings that are down 30, 40, 50% already. So what's going to happen to these underlyings if the indexes turn? Like the NVIDIA is bad today, indexes tank another 10% from here. Those underlyings are not going to go up. They're not going to go up against the stream, right? That's why you got to take the losses. The other thing is a lot of people who are involved today, they all started in 2020. They have no recollection, or they have no understanding of history or what can happen. The other side of the coin they have not seen. And the other side of the coin is brutal, man. It's brutal because it's easy to make money when everything is good. But the tougher part is to keep the money, so you keep playing for 25, 30 years, as opposed to trying to find new funds and to come back to the game. Because that's like buying a new car, getting the race, you wreck the car, you come back, another new car, another race. It just gets tiring, right? Yeah. So my point in all of this is just be careful, keep powder dry. And I agree with you with what you're saying, but then like everybody's account size is different, everybody's risk tolerance is different. And you said this on your channel many times, stay in your lane, know who you are. Just because I'm doing it doesn't mean you should be doing it, right?
That's a fact.
I'm telling you, I told you, I was on your channel about a month or two ago. I had defined risk downside trades on SBET. I closed them all today, taking losses because I don't want the shares now. Okay, period. I had on SBET, I had 15.5, 12.5 put credit spreads. I put on $1.60. I closed them all at 220. Imagine if I was just naked puts.
Yeah.
Stock went from 16 to under 9, under 10. Same thing in BMNR. Same thing is happening with all these stocks. My thing is, with the defined risk downside trades, I got my ass kicked. What would happen if you didn't have defined risk downside trades, right? That's why I look at the other side of the coin when I'm putting the trade on. I'm like, what does the other side of the coin look like? It's just pretty fucking ugly. So somebody asked me like this question, and then because I've been putting on a position on BMNU, which is the 2x ETF of BMNR.
Right.
Yeah, I'm gonna get assigned. If the stock is here by Friday, I have naked put. I have
what is was that one? That one was down like 20% today, right? Somebody was
because BMNR is down 10%.
Yeah, that makes sense.
Yeah. So to me, it's like, but I had naked puts. I had naked strangles, right? I started with a covered strangle, bought the shares, sold the 10 puts, 10 calls, and then, I took in $2.30. I mean, that's a lot, right? That's 23% for a week. But I'm going to get assigned now. But the stock is 680 now, 670 now.
And what are you getting assigned at? At what price?
At 10. But I took in 230.
So what is that? 770 break even?
It's 770. Yeah, but I'm still down $1 on once I get assigned. Obviously, this thing moves like crazy. But then I put on strangle this morning. I put on the strangle with 7s now, expiring on Friday. So that is 7s. I took in 65 cents. So I'm going to get put more at 635. I did it yesterday with 8s. 8s and 10s. I'm always doing the 10s, right?
Right.
8s and 10s. I did it at 85 cents. I'm going to get assigned more at 715. But I do feel like if I get assigned 770, 710, and 630, my cost basis is very manageable to the point that on any pop, I can make money and get the fuck out of there. I wouldn't even sell calls.
And then you're also, even though cover call is not really your go-to move, you're in a situation where you can still run a cover call campaign because you're not so deep underwater because you average down a little bit.
Yeah, absolutely. Yeah. I mean, look, I can sell a December cover call, take $1.50.
That's where managing your risk, your bankroll, there's so many factors that come into place, right? And a lot of it all starts with at least having some sort of an investment thesis. Because I think what I did early on, and I got real lucky because I was able to learn this game when COVID was helping me, right? Like everything was going up. So you got to learn why you were winning. That's where you stay in the game. And then I was like, holy shit, I wasn't good. I was getting lucky, right? Like that's what I learned the first 2 or 3 years in the market. So then I was like, okay, now I got to get good because it's not always going to be this easy.
No, it ain't going to be shooting fish in a barrel every day.
It's crazy, right? So
but that's the thing.
I think you're fine there as long as you just do 2 things. You wait on a pop, get out, or ring the cash register with cover calls and don't defend the shares. Be comfortable because you're selling them around your break even. Get out of there, regroup, and then you can decide to run the campaign all over.
Absolutely, because look, the way I look at things is, I'm not a huge fan of cover calls, but when numbers make sense, I'm a fan of cover calls, right? Because implied volatility is so high on BMNU, right? Okay, BMNR could go to 25 and BMNU will be 5, but then. My point in all of this is, well, we can only go to 0. We know that.
That's a fact.
If my cost basis is 7 on BMNU or 750, let's say, and I sell 2 months of cover calls, just 2 months.
Yeah, you lower it down.
I mean, I'm going to lower my cost basis to like nothing, pretty much, right? So, but that's why I picked that one as opposed to BMNR itself, or as opposed to
it's harder.
Taking my losses on
more painful.
And I'm taking my losses on SBET, and look, I'm just kind of managing risk, shifting risk from one to the other,
right?
And there will be a bounce play. I'm pretty sure in Ethereum there'll be a bounce play, and then on the bounce play, you can manage the thing, but it becomes really, really difficult to do this over and over and over. It's mentally straining. It's like you're basically trying to get back to even or make a little bit after going in the hole by a whole bunch. That's a really mentally challenging thing. It's not for everyone. Not everyone can handle that. And that's when people become from traders to long-term investors. They go, I'll go, fuck it. One day it'll go back up. I'm like, if you do that, then you're screwed. That's my point anyway. But so Fed minutes show divide over October rate cut and cast out about December. See, these fuckers are talking about, you know, they're hawkish, man. They're going like, we don't want to cut rates. I'm like, okay, don't cut rates. Go in a recession. See if I fucking care.
I think that one thing that, because I was listening to you a little bit before I got on, is the one thing that, and I was talking to, because I had members only before I hopped on with you. The one gift I feel like that I have is the ability to see the trade with a fresh set of eyes. I call it looking at your girl for the first time. So you go out there with your beautiful wife in public, and she's, you know, you've been on 3,000 dates with this woman, right? You've been married for years. I've been married going on 3 years. You know,
I'm on my 24th, my man. On my 24th.
Yeah. So it's, you know, they call it the same cracker syndrome, right? Like you've been eating the same saltine crackers for a long time. But here's the thing. Those crackers would be brand new to somebody else. So there's always somebody looking at your girl with a fresh set of eyes, right?
Definitely.
So you got to date your wife, if not somebody else is going to date her behind your back. That's just the way this shitty life works. Well, when I look at stocks that I'm in, every time that I open up the portfolio, I try to have this fresh set of eyes. Like if I could eliminate the pain that 2 or 3 positions are causing me right now, and if I was interested in that trade today, how would I be looking to orchestrate a winning trade today? And I always try to log some wins on top of my losers, right? Like if I already have a strangle that's being a pain in my ass and I'm out 30 to 45 days, but I'm like, dude, there's a 7-day trade that I could put on, and like kind of like what you did with BMNU, right? You're like, well, the 10's not working, but the 8 and the 7s, if they don't work, well, at least they're going to lower my cost basis, and I still maintain control of the position.
No,
right?
but I'll give you the perfect example of that, TJ. Okay, in fact, I'm glad you mentioned that. So I was on SBET,
right,
15, 12 and a half put credit spreads going out to January 2026, right? So I took my loss there.
60 days out. Yeah.
60 days out, I took the loss there. I took 60-cent loss on 80 lots. I took $5,000 loss there. Now what am I doing is I went today, just now, I just put them on. I went to 10-9 put credit spreads on SBET expiring on Friday, right? Yeah. So what did I do? I took my loss here, and I get it. And then I don't want to wait until January to get the max loss. I'm already almost there. So let me just clean that up. Let me just move it over.
Rip off the Band-Aid. Rip off the Band-Aid.
Yeah, rip the Band-Aid off, you know, accept you're wrong. Because now we're talking 15, 12 and a half put credit spread while the stock is 10. I mean, that's a long way to go. Even if we do bounce, my put credit spread is not going to make money. I mean, period. And I'm also looking at the overall big picture with ETH. But now I'm putting on 2-day out, 10-9 put credit spread. I took in 40 cents, right? Now, would I want to own SBET at 960 in 2 days versus own SBET going out to January of 2026 at 15? Yeah, I'd rather own it at 960 because that 960, I could turn around and make a quick couple $1,000s on that and lessen the loss, potential max loss on the other one. But that's what people don't do. People go like, okay, I'm just going to let this go to max loss and then see what happens. That's what you're just exactly saying. So I'm not rolling the loss. I want to stay in the game.
Right.
But I'm trying to also mitigate the loss with what I can do on a much shorter term or shorter window, as opposed to have a 2-month outlook, because nobody knows what the fuck is going to happen to Ethereum in 2 months. I have no idea.
Yeah.
But I can kind of see that we're kind of oversold. We may have a little bounce kick play here or something, and just play for that, because that's my trading account. I'm trading. Yeah. I am not in love with anything. I'm just whatever it is. But I agree with you, man. I agree. Fresh set of eyes is important, but a lot of people, what happens is that they don't do that. They fall in love with this position or idea, which you shouldn't be doing, because every position could turn into a nightmare. No, as long as you knew the risk when you put it on, I think that's the shortcoming of a lot of people these days, that they don't understand what could happen. And I'm not saying because they're so used to these V bottoms on the market, they're so used to market coming back and saving their ass, they think that's normal. And one time you cry wolf and there is no savior for you. And then now what are you going to do? Are you ready for the calamity, right? And I'm not saying that's going to happen. NVIDIA maybe will beat the earnings today and market will go right back to all-time highs.
I think it's not even them beating the earnings. I think it's the guidance, and it's because you remember, like, this is the quarter that NVIDIA wasn't able to sell to China for a little while, right?
Yep.
So that might actually damper their earnings a little bit, but I think he's going to talk about, hey, like, China's back on the table, all systems are go. Donald wrapping it up by Thanksgiving, right?
Well, we're going to find out.
That's
but
what Donald
isn't it odd? Isn't it odd?
So I think that we're not going to have the I don't speak on the macros too much, but I don't think we're going to have the clarity that we were hoping for going into these earnings, because Donald still needs to button it up with China. And I think if we think that we're at the mercy of NVIDIA right now for the market, I think the market's at the mercy of the Fed right now. And the Fed has been very, very quick to act. And if he stays stubborn on, in my opinion, outdated data that he's using, it's all backwards looking data, and doesn't lower the rates, bro, I think that we're going to have a real nice haircut, and this might be the year that Santa does not come to town.
Potentially so. And I think on the macro side, we'll finish with that if you want. On the macro side, the Fed cuts rates for one reason and one reason only. Okay, they don't cut rates because Trump wants it.
Facts.
They're seeing weakness, right? They started cutting, seeing weakness. But the problem with the Fed at the moment is that they can only control the short end of the curve. Since they have cut the rates literally over 125 basis points and another 25 coming up, maybe in the 150 basis points, the long end of the curve has stayed the same, or in fact has gone higher. So the long bond side is not buying any of it. But now the long bond side will buy it if they decide, well, fuck, we're going in a recession or a slowdown. But the other thing, what you said is correct. Market is not pricing any of this in. We're 3% from all-time highs.
Right.
If market decides, yep, there's a slowdown, or if market decides, yep, there's a recession coming, then the trade is going to be buy the fucking bonds, buy the long end of the bonds, buy the short end, buy whatever you're going to do. The stocks are going to get hurt more. That's my opinion. But Fed is always behind the curve. Government's closed for 40 days. The data you're going to get, the unemployment data you're going to get tomorrow is from fucking September. Who cares? What are we doing here, right? But I don't know, man. All I'm seeing is you must be proactive with your positions. I don't know if you agree with that or not, but you must be proactive. You cannot just say, please God, one more time, save my ass, and then I will never do this again. Is not the way to trade, not the way to look at things. And that's my way. But anyway, I could be wrong.
Yeah, I would say the one thing though about the indices, and this is a conversation I had with a buddy of mine who works at Goldman, is it's very skewed. It's a lot like a seesaw. You got to understand weight. You got to understand these indices are made up of, like, let's just take the S&P 500. They're made up of 500. It's really like what, 503, 504. It fluctuates of the largest quote unquote market cap companies in the world, right?
Yeah.
But if you really study the weight based on the market cap of the companies that make up the S&P 500, you're going to come across these 7 companies in particular that we refer to as the Mag 7. And I think the latest weighting, and you can help me out on it, Sergio, but the latest weighting of the Mag 7 is roughly 30% of the entire market right now, which is pretty quick. It might be, it's probably more, right? It's crazy how lopsided it is. So because the Mag 7 is holding up right now, it makes it look like the market's not getting its ass kicked when you just look at the indices. But if you take the Mag 7 out of the equation, the market's been getting its ass kicked for a little while
Well,
already.
there is a way to look at that, TJ. There is
And I
there's
was
an
hoping
index
you would
called,
give it to me because I was looking for it and I
there is
can't find
there
it.
is an equal weighted index that you can
Okay.
follow. Equal weighted index is not up at all. It's actually flat.
Yeah.
Okay. So people are under this illusion that, indexes are up 20%. I'm like, that means
They're
nothing
really
to me.
not. They're really
It
not.
means nothing to me. Indexes are not up at all if you look at equal weight. But no, I'm not saying Nvidia is going to make it or break it today, right? But this picture is setting up that I'm just kind of getting a little nervous about, just a little bit. Fed is behind the curve. They're not cutting the rates. They're playing this fucking Russian roulette.
He's been behind the whole time. Like I thought that it was a joke when Donald Trump would say like too late or whatever the hell he was calling them.
No, he's correct. He's
But
correct.
So let's talk about it. He doesn't lower rates. Do you?
Okay, can you give me 1 minute? Okay, well, you
Donald,
can talk. Oh, I got to go open the door, but there's somebody in front of the door.
Yeah.
I want to get Rob. You continue. You continue. I'll be right back.
Chat. So let's say the Fed does not cut rates. Do you think the market tanks? I think that in general it does. I don't know for how long. I am on the camp of, and maybe it's the eternal optimist in me, the Tom Lee in me. I feel like that Santa's going to come to town. I don't know if he's going to stay long, but he's coming to town. Does Donald have it in his power to legit fire the Fed or replace him, or do we have to wait for him to write out his term? Like, how does that work? I don't know how that works. I could ask Gemini. I don't know how it works. So I find it to be very interesting. Is that Sergio's pull in the background, or is that just something that he does as a cover? Because that looks Mag Daddy. That looks like it could be the Hollywood Hills or something. That's pretty nice. Anyway, somebody is messaging me over here. Bear with me, guys. What in the heck is going on with the market? Why is it sinking? Man, if we only knew that. Yeah, that is my understanding as well, John. That is Sergio. Wow, that is nice. I need to go visit Sergio next time I'm in town. So anyway, man, I was listening to Sergio talking earlier about your positions down a crap load, but there's people that are excited. Well, they're at least selling covered calls. So I'm in a situation where I'm down a couple $1 million on BM&R. So I have 100,000 shares at $44. So in this thing, are you back, Sergio? You're muted. You're muted.
I'm back.
You there?
Yeah,
is that your pool in the backyard, or is that like just something that you have as an after?
No, it's my backyard, actual backyard.
Yeah, dude, that's legit. Do you do barbecue and stuff next time I'm in town?
I have a beautiful side like a guest area that has the whole barbecue, grilling, smoking all set up there as well. So
that's awesome. We'll definitely do that one next time in town.
I've been in this house. I've been in this house for 23 years, and I bought it at the top in 2004. Had both my kids here, and we love it here. I'm like on top of a hill where nobody's around me.
Yeah,
it doesn't feel like I'm in LA. It feels like I'm in
how far are you from LA? 30 minutes or so?
22 miles, 23 miles from downtown, about 25 miles from LAX.
Wow, that's awesome. That's awesome.
No, it's a beautiful area.
I wanted to talk to you real quick. We were talking about the Fed. First of all, I think the market's going to tank if he doesn't cut. I think Donald will kick and scream and tweet, but I don't think it'll be of no avail. I just Googled it right now. He doesn't really have the authority to fire the Fed either. So I think.
But he already said yesterday he knows who the next Fed chief is going to be. Definitely not this guy, obviously. But I think, TJ, there is something that I've been thinking about. Maybe you agree with this one. So this is what I'm thinking. I'm still bullish on the markets long term because the musical chairs cannot stop. They cannot stop this madness that we're in. That's are going to go higher.
They got it. It's like a circus, bro. They got to keep the plates in the air.
Yeah, we got it because there's only one chair and 9 people in the room with musical chairs. It's just not going to work. Because if we can't look. I decided we cannot cut the deficits. We cannot do any of that because if we do it, markets are going to crash. Everything is going to crash. We cannot do that. We cannot have fiscal responsibility. So if we're going to keep printing and spending, Look at now Donald's mandate coming up. New Fed chief, new Fed governors, free fucking money for the foreseeable future. Midterm elections coming up. The $2,000, the $2,000 tariff checks are going to go out, bro. This is exactly like the pandemic on a much smaller basis. You know what I'm saying?
Yeah.
So, but now the problem is going to be maybe some institutional people are going to think, well, they may have thought Fed have been free of influence. Well, now the government's going to be the Fed, basically. Basically, Washington or the Donald is going to be the Fed, really.
Right.
And they're going to have everyone that they like in there. Basically, if Donald picks up the phone and says, cut the rates, they're going to cut the rates. That's what they're going to do. So I'm seeing this tough patch of maybe a couple of months here, maybe a couple of months of January also is tough. I see tough. But after that, I go, we're back to the party. We're back to printing. Printers are going to have to start at some point, right?
Yeah.
So that's why I think, that's my outlook for 2026. I don't see like a
if the Republicans want any shot in the midterms, the market's going to have to be doing well, because at the end of the day, people vote with their wallets, right?
Yeah, for sure. And we cannot be in a recession. And now the problem is, if Donald or the Republicans lose the midterm, dead duck president or whatever you want to call it, we're screwed.
Lame duck president.
But I don't know, man. I'm having a drawdown for myself. I'm having a drawdown to the point that I'm going like, I'm just going to go fucking flat now, just about. And
I've had a substantial drawdown, Sergio, and mind you, I went since February without owning shares. So let's talk about how like sometimes you just do something and you kind of wish you hadn't. So I decided that everything's overpriced in my mind. None of the valuations made any sense. I'm going to sell fucking strangles because I could play a range and make money with the range game versus trying to make sense of Palantir's valuation. Because Palantir was like giving me ulcers with like, how in the fuck can this company be trading at these levels? Fucking Mr. Market stupid. I got my Benjamin Graham book. I'm going to go light that fucker on fire and start a barbecue with it. It's worthless. I mean, like, that's where I was with the market. That's where I was emotionally with the market. And that's why I became the strangler versus the wheel deal.
Okay.
I was like, I know Palantir ain't going to go to 240. I got 900 naked calls at 240 right now. And this is how I'm sleeping. I wish I had 1900. You know what I'm saying?
Yeah.
But I got 900 because Tasty Trade called me and they're like, hey, dude, I know it feels like free money, but we got to put some parameters here. So I was like, dude, I was only trying to get to 1,000. Why you got to ruin the party? But anyway, I'm like, I got to figure out places to make money, ways to make money with stocks, because I'm very uncomfortable owning shares at these nosebleed valuations. I just was. And SoFi was no different, dude. I still own 254,000 shares of SoFi, and every day it gets harder and harder to own those shares because I'm like, okay, the earnings were amazing, the guidance, everything's all fine and dandy, but at the end of the day, it's pretty richly valued right now. It just is. So I started doing the strangle game, and it's working like clockwork, dude. Made $1.5 million on SoFi in a 90-day period. Not owning one fucking share, pretty low stress. I think there was like 2 weeks where it wasn't acting right. Like one of my sides was getting challenged, because that's always going to happen when you sell a strangle. One side's going to get challenged and it's going to test your conviction. Preferably the short put gets challenged versus a short call, because the short put's very unlikely the stock's going to go to zero. At some point, it's going to find its footing. But if the short call gets away from you, you're better off either closing or covering, because that shit could get out of hand very, very quickly. Yep. So anyway, I decided that I was going to take a stab at owning shares again with our beloved BM&R. I started doing a bunch of research on Ethereum and its amazing infrastructure, and Wall Street's coming on Ethereum. The government's coming on Ethereum. There's a lot of nerds that are building on Ethereum because Ethereum has utility, right? Like you can actually do something on that blockchain, whereas Bitcoin is just really, really good It's a store of value. It's really good at what it does, but it's very limited at what it does. What it does better than nobody else. Never been hacked. But Ethereum, you could actually do stuff with it. Right? It's got utility. So I decided that I'm going to swing trade some shares. So I started buying.
Bro, I was on your show and you said, how do I make $1 million in the next 90 days on Ethereum?
Yeah.
And I said, buy more shares, and now you fucking own the house. So I'm like,
yeah.
okay.
So anyway, so let's talk about covered calls, guys. Let me tell you what they are and what they're not. So covered calls is a way to generate premiums on stock that you own, but it is not going to help you if the stock just crashes and burns to the ground. It's not some sort of a miracle make me skinny pill, or was that one movie where you take the pill and it's like limitless or whatever, and you're like it's the best thing since sliced bread. What it is for me, like I'm just literally trying to use my real estate investing hack, because I used to flip houses in a previous life. And I'm like, okay, I'm in this freaking stock for a shitload of money. How much premium can I generate, and how long do I have to do it so that I cannot forget about manufacturing the win? That's out. Manufacturing the escape, manufacturing the break even, right?
Yep.
And I'm like, I have to sell covered calls right now for 12 to 15 months, depending on if BM&R can stay in like the $25 range.
Yeah.
If it goes below that, I probably just added another 6 months to a year. And this is even being very aggressive and selling like at lower cost basis, banking that I'm gonna have to roll and stuff. So now you're having to use tricks that aren't recommended, right? You're playing chicken with the market essentially.
Yep.
So I'm like, it's real tough if you're just going to buy shares at any level and think that covered calls is going to be your saving grace. At some point, if the underlying does not perform, there's nothing you can do about it with premiums, because the premiums are like they're like little breadcrumbs. The entire loaf is the capital appreciation, or in this case, depreciation. So I'm bag holding BM&R and I'm hoping for a bounce, right? I do think that there will be a bounce, but I also don't know when. I am fortunate to where if I don't have access to that capital and all I'm able to do is generate the cover call premium, which is peanuts compared to what I have tied up in the position, I'm okay 3 to 5 year window. Like I'm good. It doesn't feel great, but it doesn't really hurt me that much because I still have plenty of other money that I'm able to be in the market actively with. But now you essentially have a bunch of fucking dead money there that you're not able to do. So one thing I wanted to run and by you real quick, Sergio, because what I had considered doing is I got in this predicament before with the stock y'all might have heard of, SoFi. I got in a situation where my average cost on the shares was about $17.50 early on in my career. And somebody commented on the chat, hey, why don't you buy Leaps, sell the shares, and run the poor man cover call campaign, and you free up a lot of capital. So I did that. And then I got tagged with a wash sell.
Yep.
So I was able to talk with Robinhood specifically on this wash sell. And they're like, if you buy or sell, because people only talk about like selling the shares and then you buy within 30 days and then you don't get credit for the loss.
Yep.
But if you buy the Leaps and then immediately sell the shares, like if you buy the Leaps within 30 days, they if it's similar of like kind or whatever the hell they told me, you could get flagged that way also. So if you think about trying to do those types of things, you want to talk to your broker first, or buy the Leaps and hold them for 30 days. And then you can offset, you can free up the money by selling the shares, and you're still able to collect the cover call premium. The good news is the Leaps aren't setting you back as much as owning the actual shares. And then you can go repurpose that money somewhere else. But it just, again, it becomes, it can become a downward spiral. And sometimes maybe you're just better off cutting your loss and regrouping, right?
Well, first things first. My hat's off to you because you said something that I've been saying for a year, and people come at me the wrong way because I say, I say it on my chat group myself. I go, I hate cover calls. I mean, I don't hate cover calls, but I say it in a way that exactly what you said. No cover call.
It's
If
not
a
your
stock is
go-to.
going to go down 50%, no cover call is going to give you any protection.
Yeah.
And this is what I get pissed off at, TJ. I see all these goddamn fools on X, and then X Algo is really good now. It feeds me the shit I hate, and they all go like, look at all this. My win rate is 100% with these cover calls.
That's hilarious.
Okay,
Yeah.
I go, you fool. If your win rate is 100% with the cover calls, what the fuck happened to the underlying? You must be dead on the underlying. That's why you're covering those calls at a lesser, value than you sold them at, because the underlying is dying over there. But anyway, now number two. When you so I am not criticizing what you're doing. It's your money. You do whatever you want to do. However, but think about it this way. There's one thing that I've learned a long, long, long time ago. There's something called opportunity cost, right?
Facts, yeah.
And hindsight's 2020 always. Nobody knows what's going to happen to BMNR or stocks or anything next hour, let alone next month, let alone next year. All these fools are out there going like, oh, I know what's going to happen. I'm like, you don't know shit. Nobody gives a shit about what you know. However, there's the opportunity cost. Like you were on a train doing your strangles, doing whatever you were doing, right? Something
it was working, bro. It was working.
Exactly. So, but
and then I got distracted, and I'm fucked now on the third.
You were wheeling. That was working, and then you found a strategy that fits your psychology, your bank account better, that will make you as much or more money, which was strangling, right? And then I'm not saying you're abandoning that, but what's happening is that now you tied up all this capital, and none of us are the Fed. None of us have unlimited amount of money.
Agreed.
And loss is a fucking loss. I don't care if it's unrealized, realized, whatever the fuck it is. It's a loss. So
you know how you know it's a loss? It doesn't feel good.
That's how you know. No, because that's the mental part of it that you have. Okay, you could have like a screen of I used to do this all the time. I would have like a screen of 50 stocks. There'll be one that's bleeding, and I own that fucking thing, and that all 49 would be green. That one would just take away all the fun out of the 49. You know what I mean?
It's crazy.
So you changed again somehow, got into BMNR, and okay, I don't know what's going to happen to BMNR. Hopefully, it'll work out. But cover calls on BMNR is something that at some point is like useless, honestly, because you're taking pennies in front of the bulldozer and you're trying to make it fit. And my thing is opportunity cost, because now that BMNR becomes a long-term position maybe for you, right, just to wiggle yourself out of it.
Well, you need to be fair, and I never intended to own this many shares, but when I bought the shares, I wanted to own them for 5 years because I do believe in, and again, this is not BMNR more. It's, I believe in the Ethereum is going to be like the shit, dude. Like I really believe that.
Well, no, that's fine. I am all for that.
But it wasn't ever supposed to be this many shares. I was only trying to do it with 20,000 shares.
I'm all with you and I agree with that. And I said this to you before and publicly. I think long term is going to be fine. Yeah. What I'm opposed to is all these fools, and I'm serious. I wish they grab the link and come on. All these fools, they go start drawing lines and look at RSI is here and this is going to do this and chopsticks.
Bro, like this Ethereum needs to work, or BMNR ain't going to work. And I don't care. I have all the respect in the world for Tom Lee. I don't know him personally, but it doesn't matter what Tom Lee says. If Ethereum does not go up and to the right, this experiment is not going to work.
Absolutely. See, he's saying this.
It ain't going to work. And I'm 100,000 shares in and 800 leaps. Guys, I'm telling you, this shit is not going to work if this adoption doesn't equal token appreciation, right? Like however you say it, right?
If Ethereum doesn't go up, BMNR is not going up, because that's
Zilla, whatever. We had to name them all. It doesn't matter.
Doesn't matter.
It doesn't fucking
but
matter.
that's the crack that's being sold at the moment. That BMNR could go do whatever it does
How?
separately from
How? They don't have
Ethereum.
unlimited funds, bro. How? Like, if you really look at all of these digital asset treasuries with an objective eye,
Yeah,
they remind me of my beloved Bitcoin miners early on in the game, meaning they were all undercapitalized and dilution was the solution.
yep,
And that works until it doesn't. At some point, the investors are like, I want to go play somewhere else because I'm tired of you calling the at the money. I feel like your ATM, your personal ATM. I feel like I was Riot, Marathons, Clean Sparks, ATM for like 3 years.
yep.
And I was like, man, if it wasn't for puts and calls, I wouldn't have made 7 figures on Clean Spark and Riot. It wasn't until I had one run where I had nice capital appreciation. This was like early on in like 2020. And then it wasn't until recently, like 3 months ago, that, oh shit, Riot paid off on the capital appreciation, but the rest of the time was just breadcrumbs. It was breadcrumbs. The IB was high. The premiums were good. So the breadcrumbs distracted you from the capital appreciation that you could have probably gotten somewhere else. Because let's just be honest. It's a hell of a lot easier to own a stock like Palantir at 8 and ride it up to 80 like I did. You know what I'm saying? There's other people that rode the shit up to 206. Now they rode it back down to 160. They're probably hoping that they could have sold it at 200, but it's hard to do, right?
Well, that's what I want to do. I want to say buyer beware, right? Because don't compare DATs, any DAT, MSTR, BMNR, SBET, DFDV, I have fucking endless ones, right? Or ASST, right? Okay. Don't compare any of these to a Facebook, to a Google, to a Palantir, even as overpriced as it may be to NVIDIA. Because these companies don't have cash flow. These companies don't have earnings. They just have Ethereum or Bitcoin or whatever they hold, and that's it. So if the underlying is not moving in that direction from the lower left to the upper right, none of these are going to move this way. They're not going to move separately. Now Facebook, as badly as it got hurt, will move because it has earnings, it has free cash flow, it has this, it has that, it has revenue, it has that. These companies, you're basically buying Ethereum. My thing was, when I came on your show, was MNAV. Watch MNAV. If MNAV is getting crushed on all of them. I think the only one above one MNAV, I think, is still BMNR. And I'm like, okay, I want to play when it's probable for me to make money on some of these. But then even that way is not a guarantee. I bought SBET at $15 when MNAV was 0.85. 0.85. Today, MNAV is still 0.85. SBET is 10. Why? Because Ethereum is down 30% the last month and a half. Not because of anything else. So people have to understand this. Ethereum goes, you will be good. If Ethereum goes this way, you will be going this way. There's no if, but, sideways about this. Period. Agreed. And then on the long term, I do agree with you. I think Ethereum is going to be the shit, and this bloodletting has to work itself through. And but don't buy it because Tom Lee did it. Don't buy it because Serge says it or TJ does it or whatever. We do our thing. Our accounts can handle what we're doing. Don't play the blame game. Oh, Tom Lee fucked me. I'm like, Tom Lee didn't do shit. Tom Lee is Tom Lee.
Yeah, he hasn't made one of these trades for me, guys.
Yeah, exactly. He hasn't come in my account lately. So all I'm saying, they go, Michael Saylor, Ponzi artist, blah, 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 blah. I'm like, bro, the guy is doing exactly what he said he's going to do. Tom Lee is doing exactly what he said he's going to do. He's just going to keep buying ETH all the way to 5%. That's what he's doing. Now, what's going to happen to Tom Lee and BMNR if MNAV goes under 1? Because now you cannot do ATM. Now what?
But it could be under 1 now. We don't know because we don't know their outstanding share count, right?
So well, it's every day he's doing ATM, you could tell. Yeah. But what I'm saying is that under 1 is like eating your own flesh. You cannot dilute and buy ETH. You cannot sell shares. It doesn't work. Is he going to come and buy shares back? Now that's how you can increase your ETH.
Zilla did that, I think, right?
Yeah, SBET is doing that, but then I don't think they have the cash to do it. So again, buyer beware, folks.
But then that defeats their alchemy of 5%, right?
Absolutely, yeah. So to me, it's like, look, this is a tough stretch that we're in.
Dude,
Volatility
make
is
no
kicking
mistake
around.
about it. Tom Lee has made a bet that Ethereum is going up, and the only reason that we chose BM&R, or the reason that I chose BM&R versus owning Ethereum directly, is because I can sell puts and calls on BM&R.
Absolutely,
That is
absolutely.
literally the only reason I chose BM&R, and why I chose, or I am choosing, because I have a strangle on strategy as well. That's
Yeah,
a lot easier to manage, by the way.
yeah,
Again, just proving to myself again that strangling is the way of the world for me.
yeah,
Like moving forward, right? I think that I will get out of this BM&R jam eventually, but it is a nice reassurance that I found the path for me, right? And
yeah,
now it's just a matter of balancing my deltas and how many puts I have versus calls, depending on how bullish I am. The sentiment is, this is there's there's all the nuances, right? Because you can just a vanilla strangle 16 delta, sell a put, sell a call, manage it. But I'm really trying to understand all the nuances and intricacies to see how can I become like, the strangler, right? Because there's a lot of premium that you can strangle. You just got to really learn how to. There's a
yeah,
win there. There's always a win there. You just have to figure out how to play it. Like it's like hearkening to like sports betting, because the prediction market's all the craze on Robinhood right now.
yeah,
Every fucking spread, there's a win there. You just got to try to figure out how to get on the right side of things.
yeah.
And
Well, you know what? I think all this will be, conversation that we had. We look back at this, and I think what you say is true. You look. If you bought BMNR because Tom Lee did it, you're a fool.
yeah,
Uh, if you
that's
bought
bad.
BMNR because you think, and a lot of people that they will turn on Tom Lee shortly. Watch X now. They will all turn to Tom Lee now. If Ethereum goes to 2,500 and BMNR goes to like 25 or 20 whatever, they'll all turn on Tom Lee, and then that'll be the bottom probably. But
Yeah,
my thing is, do your own due diligence. Know your late. Know your account size. What can you handle? What can you not handle? If you're not doing any of this, then I feel bad for you, but then I have no remorse, honestly. But then TJ can do this because he knows himself, number one, very well, and he knows his account size, and he knows what he's got backing him up, and he can do it.
yeah,
Just because he did it doesn't mean you should do it. It
that's a
means
fact.
nothing,
That's
nothing,
a fact.
right? And to me, it's like, yeah, influencers are influencers, man. They're just
Yeah.
human, just like you and me, and they have green cash in the account, just like you and me. And what can you handle
Right.
emotionally?
I mean,
What can
just
you
just to call a spade, guys. I'm in this thing for with if I add the leaps as well for $5 million.
There
And
you go.
it's generating in premiums on calls, I'm sorry, is generating between 125 and 150. So that sounds real good, right? Because you're like, oh my God, that's $1.5 million a year, right? That sounds great. But I'm down $2 million on the stock. So let's just think about it for a second. And it would have to be like clockwork orange to where I'm getting that $150,000 bill month after month after month after month after month just to get to break even. And this is provided that BM&R doesn't go down from here. If it goes
Yep.
down from here, you've just added another year or two, and then possibly you lose control of the position because your cost basis is too high, and then you're gambling, you're playing chicken, selling calls over here, and that could be a really really dangerous game that can keep you up at night, because now it becomes counterintuitive. You're down all this money on the shares, but you want to go pick up. Granted, it's a 6-figure paycheck, but when you're down 2 7 figures, it's not good.
Yep.
So are you going to risk? Are you going to risk BM&R waking up on the right side of the truck bed and then going up 20-30%? You're no longer cheering for the thing that could help you the most.
Yep.
So that's where I think that sometimes Sergio has a bit of a disdain with covered calls, because it's a little bit counterintuitive, because you're getting a little bit of premium, which is good for cash flow. But you don't ever want to put yourself in a position where you're cheering against the stock.
Yeah. I mean,
Because
look, you're
it's
cheering
awkward.
for the stock. You go in the hole, big
Yeah.
amounts, and then you know how mentally challenging that is. Now you have to
Yeah.
stop cheering for the stock. until the calls expire, then you're going to cheer for the stock. I mean, there's no consistency in there. That's like this roller coaster of
tough.
emotions. Right?
And the
I
one
mean, you
thing
did that on SoFi,
yeah.
you did that on Palantir, right? The fucking
Yeah,
thing
but the
went
one
from
thing
30
that I
to
did,
7.
one thing that I did do differently here, and I learned it on SoFi. The reason I made so much money, and I made $3 million in premiums on SoFi, was because I bought leaps. I bought leaps. So I like right now I have 800 leaps on BM&R so that I'm able to run a very aggressive covered call campaign. And if I get caught with my hand in the cookie jar and I decide to let shares get called away, well, my leaps will be my saving grace if I choose to free up all that capital, right? So I don't have to buy the leaps. I don't have to worry about wash sales and whether or not the broker is going to work with me or not, because the decision was already made on the front end. I bought leaps. So I have my quote unquote participation trophy to the upside. So I do think that this cover call campaign, and make no mistake about it, it's a campaign. I'm going to have to do it for a while, will eventually get me out of trouble if, and this is the big caveat, if BM&R can find its footing here relatively soon.
Yeah.
If it can, and how is BM&R going to find its footing? Ethereum has to find its footing.
Yep.
And I have no idea where that bottom is. I thought that 89.90 was going to be the bottom on Bitcoin. I believe that Bitcoin is under that now. They're saying that
88.5 now.
So I don't know. I don't know when that bottom's going to be, and I don't think anybody does. So
I mean, it's been straight up
gotta
selling.
weather the storm. Gotta weather
last 5 hours, TJ. It's been straight up selling. It started at 93K. We're down to 88.5, and I'm looking at my Ethereum is 28.71. It's straight up selling. 3,100 to 20. It's down like fucking 9%. Like Solana, same thing. My thing is, I am just saying to all the folks who watch us or watch you and me or whatever, I go, buyer beware. Do your shit that fits you. Don't do anything because shit, man. Don't do anything because your daddy told you, let alone Tom Lee. Don't do it. Just stay on your, sit on your hands. Sitting on your hands is fine. You don't have to be involved every day. And but once you do get involved, have a plan. What is my plan? Like his is, I'm gonna sell cover calls until this thing comes back and do whatever. What is your plan? Because some people's plan, I feel like, is stick my head in the sand, and then when I do come out, it should be okay. That's not a plan. Don't do that. Have a plan. Like I had a plan. It didn't work out. Took my loss. Now I'm doing it. I'm giving it another shot. If it doesn't work out, I will take my loss. But all I'm saying is taking these losses, smaller losses, is better than taking one big loss at the end, or be forced to sell or be forced to do some stupid shit that you're not supposed to do. And that's all I'm saying. Just caution. Just be cautious. And anyway, but so we're going to find out today what NVIDIA says and what's going to happen with the rest of the world. But yeah, it's tough. So how many shares do you have on BM&R?
150,000 out of 5 million is 3%.
Yeah, so I was just checking the math. So I'm able to generate 3% a month right now in from the investment, because the investment's $5 million. I have $5 million in BM&R, and it's generating 100.
How many shares do you have now?
100,000 shares.
100,000 shares.
And we're done. We're done. And we have 800 leaps. Now, mind you, I bought the leaps out of the money, so I'm not able to run the poor man covered call on it. I mean, I can, but Tasty Trade will require more buying power.
Yeah, if you saw, but then that'll become like put credit spread the other way around. I mean, call credit spread the other way around. Yeah, they will require some. They will not require a lot more, but they will require some, depending on what kind of.
I've already done little scenarios. I would need like another $1.5 million in buying power, which is cool, but then that limits me. That limits me on what I could do. And then if I use that buying power elsewhere, I'll make a lot more money. It's a lot more comfortable.
Well, that's the opportunity cost.
It's just not worth doing. It's just not worth doing.
Yes. So 100,000 shares.
I can sell 1,000 covered calls per week, monthly, whatever I choose to do. But
I,
the other
I,
800,
I definitely think you should do them weekly. I don't think you should, I don't know if BMNR has weekly calls, but if they do,
they
then
do.
definitely do.
They
Yeah,
do.
yeah, definitely do. Take those nickels and dimes. Those will all add up, because as wild as it is to the downside, it's going to be as wild to the upside. I can, that I can guarantee you.
400,000 in covered call premium so far with BMNR. It's fucking retarded. But when you're down 2 million, does it really matter? I'm just, but I'm saying I'm thankful that I do at least have, like, I'm just looking at it like this. I'm looking at it like we bought a hotel and the shit didn't work out, but at least there's rent there and we're playing for the rebound. And hopefully the rebound happens. If it doesn't, well, then it goes down to
yeah, I agree. I agree with that comment. Do you agree with that comment? Risk management protocol should be in place before it. But that's what goes to my 3 Ps, Brock: capital, patience, position, and planning. What your plan when your shit hits the fan? Because nobody gets into a trade thinking shit is going to hit the fan. And then when the shit hits the fan, if you don't have a plan, this is all rhyming actually now, if you don't have a plan, you're going to get blown account. That's what you're going to get. You need to have a plan. You need to know, you need to learn how to take an L once in a while, because not everyone is going to be, I mean, TJ, I want to get off X. I really do. Because it's like it's irritating.
It's so entertaining though, bro.
It's very entertaining, but it's like algo is so good now. God forbid if I stay on like a little comment for like 10 seconds, holy shit, it feeds my whole feed is full of that identical stuff. And I'm going like, Jesus, Elon.
I feel like I get some pretty good I don't know. There's like trade ideas per se, but I get it. But I get exposure to stocks that weren't on my radar.
Yeah.
So I feel like it plants a seed. Like I'm going to give you an example of a seed recently that has been planted on X that I think could turn into something that ends up making me money down the road. And this is, I'm going to leave you guys with this. The stocks that have been making me the most money are the ones that I don't rush into. The stocks that become a pain in the ass are the ones that I rush into, and I rushed into BMNR, and here it is. I had earmarked $5 million for this thing. I didn't expect to have to deploy it that quickly, right? So that was, again, like there were some errors that I made along the way. If I'd have played it differently, I'd be down maybe like $1.5 million versus 2 million, which doesn't sound like a lot in the larger scheme of things, but it's a lot of money. You know, it's fucking 4 rounds of covered calls. But NBIS is one that's on my radar that seems very, very compelling. And I'm just being real patient with it. And then the other one that has become very, very compelling, and it's all because of what the algorithm feeds me on my X, is EOSE.
Yep.
Or EOS. I don't know what it's some battery company.
NBIS. I'm warm to it at like $60. So I wouldn't touch that with your money at the moment. But
yeah,
I do like you know, I mean, that's true actually. That does give you some ideas about, you know, and you don't have to do it.
And then there's another one. There's 2 more that one I've already made 7 figures on, and that's PayPal. But PayPal has gotten to levels again that it's approaching my no-brainer territory, if you will.
Yeah.
And then the other one that has made, you know, $300,000 for us this year, and I feel like shit. This thing's, especially when a new administration comes in and believes in like global warming and those kinds of things.
Yeah.
I think that I can make a shitload of money with Enphase at these levels.
Yeah, that I've never been too friendly with that one, but okay, I'll tell you one thing. I bought.
Yeah, but I'm just talking about like on the premiums, dude. Like if you just go sell puts at like $24 or something, dude. Like these premiums are crazy, and it's a real company versus just like whatever arbitrage that they're doing or not doing, Ponzi schemes, right? Because people argue over what these DATs are or they're not.
Well, that's are, you know, they're not even stocks. Well, they are stocks, but they're not, whatever.
Well, I'm saying like Enphase is a real company that has a really, really good leadership. Like their management's legit. They have a legitimate product, a bunch of patents, and they're worldwide. They're not.
So I take a look at, you know, when you have time, you should take a. I have 4 stocks in my long-term portfolio. I added UPS 3 days ago. Okay.
Yeah.
UPS is selling at the same price as it's selling in 2006, actually. and it has a $1.65 quarterly dividend, which is over 7% at the moment, right?
That's nice, real nice, yeah.
So, and I don't know, options I don't think are going to be juicy on UPS, but they already started laying off people. You can look at the chart later, and then stock has already popped a little bit, and it's holding itself together now. So I added that. I'm long Google, I'm long Kava, and I'm long Lululemon in my investment account, and that's long term. I don't sell options. I sell cash secure puts to finish the position, round it off. But UPS, I think, is pretty reasonable here. The other ones, MBIS, be careful. IREN, be careful. You know, that story will play itself out with the AI power generators, you know, that kind of a thing.
Yeah.
I was going to dabble into, you know, you're strong in those three, not Mara, CLSK, or Riot, right? So I'm looking at these fucking things. Holy shit. CLSK is $10. It was 24 like a month ago.
Yeah, but a month before that, it was right at $9 and $10.
Okay, so would you sell some puts on CLSK now?
I have 500 puts at 11 for January.
Okay,
and I'm not even going to look at them. I'll take assignment at 11 because I'll just cover calls at 11 if it's at 9, and it matters.
Yeah, I may do that, but yeah, I'm looking at the chart. I mean, that
premiums are good too. It's a real company. It's a legit real company.
Which one, CLSK or Mara or Riot? Which one would you?
CLSK. If I had to rank them, well, I'm partial to Riot because I, you know, like Jason's going to come on the channel, and I just know more about the company. But CLSK is like fucking legit as they come.
Okay.
Marathon, it used to be the Wall Street darling until this cycle.
Hey, don't they hold the Bitcoin as well?
Yeah,
the Marathon
they're the largest one aside from Strategy.
Which
as
one?
far as their Bitcoin holding, the HODL.
Marathon has as much Bitcoin. Okay, Marathon is back to 10, 11.
Yeah. But you got to keep in mind, like there was Cypher. There's a handful of them. I think CoreWeave did a deal with Core Scientific.
Yeah.
These are the ones that announced that, hey, we're going in this direction, right? Like the HPC AI narrative, the high performance compute, artificial intelligence narrative. And then Riot announced something, and then now everybody's trying to get on that train. But you got to really like study their infrastructures. So the reason I'm super bullish on Riot right now is because I'm very familiar with their infrastructure, and they're like tailor made for a really big deal. And I do think that, especially with the new guy that they brought in a few months ago, I do think that they're going to find a fucking monster deal, dude, like in the $5-10 billion range. Okay. That's just that's just my belief. And that would definitely do wonders for their stock. Probably catapulted to like 25 or 30 very quickly.
I will sell some CLSK $10 puts. That's what I'll do.
Yeah. $10 puts on CLSK are no brainer. Stop selling puts on Riot because the buying power requirement on Tasty Trade weren't favorable in comparison to CLSK. So I was like, well, these companies are very, very similar. I'm super bullish on CLSK as well. So that's why I sold.
That's a good point, actually. That's a good point. So, folks, listen to this one, okay? Whatever brokers you're trading in, from stock to stock, the requirements are going to be wildly different. So if you're looking at a group like Mara, CLSK, or Riot, which basically the same shit, one of them is going to be unfavorable and one of them is going to be super favorable to sell puts on.
Agreed.
Make sure you go with that one as opposed to that one. Because
it's real painful for me not to sell puts on Riot at these levels. But I was like, I'm just getting better value on CleanSpark. So what I did is, I made $250,000 just buying leaps on Riot, and I made money on the run. And then I started building up my leap position on Riot again. So you just got to figure out how you can make money with that ticker. Like there's so many people that analyze where's the stock going, where's it not going, X, Y, and Z. And I'm like, I want to leave y'all with this because I want to get a bite to eat, and I got some FaceTimes that I got to do, and then I got to go meet with my father-in-law as well, and that's always going to be fun. How can you manufacture the win with this particular ticker? Is there a win to be had here? Because it's how you play the stock, right? The stock's going to do what it's going to do, Sergio, but can you orchestrate a trade that makes dollars and cents for you and your portfolio and your temperament and your situation? And I think a lot of people don't spend enough time doing that. Like I don't just look at a ticker and I look at the price action. I'm like, how can I really concoct a trade here that makes sense for me? I sleep at night and I'm like, I think I'm going to ring the cash register at the end of the day. And that's what I spend my days doing all day is like, I look at these, I look at the Palantirs, I look at the Robinhoods, I go through my watch list, right? I got like 20, 25 stocks on there. And I look at it and I'm like, where's the place that I can make the most amount of money and sleep well at night right now? Like where's that opportunity? And it's always there. You gotta find it.
Markets open every day. There is opportunity every day. You just, have to understand it and do the work. Okay, do the work. Don't listen to me. Don't listen to TJ. Don't listen to definitely too many people on X. And TJ and I know, I think, what we're talking about. But then I'm just cautious. And to me, our lives, our ages, where we are in life, who we're married to, what our account size is, what our bags are, it's all different. Yeah. We're like, we all have different fingerprints. Okay, there's a reason for that. And trading is the same thing. What fits me is not going to fit you. And especially if you size incorrectly. If you size incorrectly, you're going to get freaking hammered in markets like this. So my thing is, look, man, trading is trading. It's a fun thing to do. But then over long periods of time, look to accumulate assets. That's my goal. And that's my goal to teach. I've done it myself, but that's my goal to teach. Long periods of time. Trading is fun. Invest. Accumulate hard assets. That's what you need to do. Because that's one thing that's never going to change. But anyway, so I'm going to go grab something to eat too, man. And then...
I would just say make sure that you're having and most of us are, right? Unless you were just a king and you bought all the puts. Good for you. My hat's off. I didn't do that. Everybody got my X feed did though. Everybody on my X feed.
Everybody bought these puts, right? But you know what though? See, you know who Jem Carson is? Jem Carson is the king of volatility. He's a brilliant man. You should listen to him once in a while. It's Kai Volatility. Okay, he's the man that wrote the book on volatility. Long story short, he said something about 4 months ago, and I shared it with my group, and look, it's coming to play now. He goes, listen, a lot of these institutions are pushing IV up by buying all these puts on indexes to hedge themselves, but indexes, they're going to lose money both ways, he goes, because indexes are not going to go down, and the underlyings are going to get smashed, and that's what's happening right now. If you own the underlying, some like handful of stocks, you're down 30, 40, 50%. While the indexes are only down 3%. So the puts you bought on the indexes did not hedge you shit. Didn't give you any protection whatsoever. So buying puts ain't that easy either. But X, somehow people will always buy the bottom and always sell the top. And you know how those are going.
But they don't show you receipts.
Oh no, they don't. I think we're the only two people that are actually showing, accounts and shit.
Another news, SoFi is green for the day, and that is my largest strangle. Guys, SoFi
where is your strangle on SoFi? What strikes
SoFi has been my saving grace. I actually took the naked calls off today because they were up 65%.
Yeah.
So now I'm just I have short puts at 26 for a ways out. I like to do these quarterly because I don't like to babysit them. So yeah, right now I'm right after the next earnings report. I'm at February the 20th. I have 5,000 short puts at 26. If she goes back over 30. Now I'm getting paid.
But did you roll them down because you had to, or no? You just did it?
No, I just did it because it paid me another $400,000 in premiums. And I went from 28 to 26. So just taking a little risk off the table. I am playing, just so y'all know where I'm at with the market. I am playing for a Santa rally. Like everything that I'm doing, the moves that I'm making, I believe Santa's going to come to town. I don't think he's staying long though. So if there's an opportunity for you to reposition when things look a little bit better, because whenever the market sucks the way that it does right now for most of us, it's a real good idea to take inventory of how you feel right now, because you won't take this inventory when things are going well.
Yeah.
That way you make sure that your capital matches your conviction, because when your capital matches your conviction, you're sleeping like this at night.
Take this to the bank and let that be his last word on for today. Say it again, TJ. Say it again. Capital meets your conviction.
Matches your conviction, you're sleeping like a baby.
Well, see, if you don't understand that, folks, go fucking Google it or Gemini it or do something with it. It will explain it to you, because that's Bible right there. Yeah. And I don't say that about too many people, but capital not meeting your conviction, will divorce you, will give you an
Horrible.
ulcer,
It spills into your
will
personal
make you
life.
lose friends, and will make you a basket case Xanax baby. So if you don't fucking do that, at least do that. At least just do that.
There's a 1 minute clip, less than a 1 minute clip of Warren Buffett, where he's talking about that he cheers for his stocks to go down because he invests in companies.
I've seen that.
He invests in companies. He's like, what do you think when the stocks go down? So I think I'm going to get more for my money. Like he's just like, and he's real witty, right? Warren Buffett's a very witty human being. And when I got into the stock market like full time in 2020, I'm so thankful because the algorithm put that in my feed on YouTube, and I watched it, and I was like, it feels really weird, but if I'm in the business of buying stocks, wouldn't I rather buy them cheaper than more expensive? Like, I mean, if I'm in the business of buying shirts, t-shirts, whatever, caps, whatever it is, if you're the wholesale retail business, the lower you buy them, the more you can make them when you sell them, right? And but stocks is really different. People only want them to go in one direction, and I want them to go like on BMR. I wanted to go up now because my position is like maxed out. But when a position is not maxed out, you're building it up. It makes sense to want the stock to actually go a little lower so you get a better entry point.
I agree.
It's like real estate, man. I got to go, but real estate is you make money on the front end when you buy, you realize it on the back end when you sell. So you got to be able to figure out what's a good entry point, and that is hard.
Yeah,
I'm still when I figure it out, I'll let y'all know.
No, I agree. I agree with everything you're saying. So
Capital matches conviction. I got to run. I appreciate you, Sergio. Take care.
I appreciate you, man. Thank you.
Bye-bye.
Bye. All right, we're going to finish on that, except I saw a couple of comments. Yes, I have read the book, Reminiscence of a Stock Operator by Jesse Livermore. In fact, I have a video about that on my channel. Let me put that up. You know, I'm not sure 100% of it applies to today, but most of it does still. It was a book in the 40s. So Brock Capital says, Sergio, have you ever read? I have read it. I definitely have. And I love stock market history, so I always try to study up on it. Traders, investors have never heard of. No, I've read it. I have a video on the channel about it. You could probably go Google it and check it out and find it. About his 4 famous quotes. There's like 4 or 5 quotes that are valid today as they were in 1929. And 100% agree. There, not much has changed when it comes to that. I have read it, and I highly recommend people go. In fact, you have Gemini in your pocket or Grok, just go say, what did Jesse Livermore's book, summarize the book for me, Reminiscences of a Stock Operator, and go check it out. Everything fits to today like a glove, although it's 80 years later, 100%. Yeah, absolutely. Yeah, I've read it. I enjoy it. Yeah, I absolutely have. So anyway, folks, I didn't know TJ was coming on, but it's good that he showed up. And yeah, we're tough. It's tough. So we gotta circle the wagons and hope for better days coming ahead. NVIDIA earnings coming out today, unemployment tomorrow. Should be a little bit more volatility inducing kind of a thing. And Friday I'll be back with our hour, and see you guys on Friday. Please put a thumbs up if you like it, share it, and check out my video that came out today. Why you should not be listening to influencers on X. Why you should not be listening to anyone except yourself. You shouldn't even be listening to your mother if you're trading. You should trust you. So I trust me, and I still lose money. Okay. But then I know where to stop. I go like, okay, stop. Stop is enough. Like, we need to stop. And then turn it off. Come back in 2 weeks, a month. You don't have to be involved every single day. Anyway, you have a great day as well. Everybody has a great day. Stay healthy. And we'll see you guys Friday, Power Hour. Adios.